Hello, welcome to the weekly technical analysis review. It's Monday, June 12th. I'm Selena Nicholas, technical analyst at XM.com. Today we'll look at some major pairs on the daily chart, and we'll start with Euro-USD. Euro-USD is looking neutral now. It's more or less trapped between 1.11 and 1.13 after the rally lost steam ahead of this key resistance now at 1.13, and the market looks a bit tired after making higher highs and higher lows since January. For now, the RSI has turned lower. It's indicating a loss in upside momentum, and the daily close below 1.12 could see prices target 1.11. That was also a previous support level, and a subsequent close below this could see a deeper correction to 1.10, and below this could expose the area around 1.8, and that's near the 200-day moving average. But if we look at the bigger picture, the uptrend is still intact at this stage. Only a drop below 200. The 200-day moving average would change this bullish picture. Now let's turn to the pound dollar. It had quite a big tumble and brought on a more bearish view for the pair. RSI dipped below 50 as well. Now the level at 1.2775 was an important support level that was tested in the past, and now it's turned to a resistance level. So you can see prices attempted to rise above this, but fell back just below this level. So for now, downside pressure remains, and there is scope to target the 200-day moving average, which is close to the 50% Fibonacci level. That's at 1.2574, and it's of the up leg from 1.2108 to 1.3046. A close below this 50% Fibonacci would start to change the market structure, and there could be an eventual move towards the 1.21 area, and this would bring definitely change the outlook from a recent neutral to bullish outlook to a more bearish one. If we look at dollar yen now, we can see that it's testing the key 110 level. Dollar yen was in a downtrend. We saw lower highs, lower lows since the end of last year. Right now, the market's moved below the Ichimoku cloud and also just below the 200-day moving average. So it's starting to give some bearish signals, especially with RSI below 50. So there is a possibility for a further decline, and we could target 108.12. That's the 2017 low. It's the lowest level so far this year. And then below this low, we would confirm that a top is in place at 114.36. And we'd actually need to see a move back above the 112 area to bring about a more neutral view and shift out of this current bearish view. Let's turn to the Kiwi dollar, because we saw such a strong rally from 0.6816 back in May all the way up to 0.7250, but this bullish run has lost steam as the market reached overbought levels. We can see RSI reach 70, so that's overbought levels, and prices turned back down for a second day today. So we could target support at 0.71. That's near the 200-day moving average as well. So that's an important support level, and below this 0.70 comes into view, and from here we would change the uptrend. It'll be negated. Let's turn to the Australian dollar versus US dollar. Aussie dollar's seen a decent recovery from sub 0.74 levels. Prices rose above 0.75 and also above the 200-day moving average, which is now providing support. So could Aussie dollar be changing the trend? It was in a recent downtrend from 0.7748 down to 0.7330 until we saw bounce higher. Now we need to see further bounce higher, at least above 0.76 and up to 0.77 in order to change back to a more bullish outlook. Of course, a drop below 0.7330 would be very bearish for the pair. Now finally, let's take a look at gold briefly. We saw 3 days of declines before pausing just ahead of the 50-day moving average. Prices are now around 1265. Although the bullish outlook still is in place, we still have the higher highs, higher lows. But we need to see a break above 1300 relatively soon. That's a key resistance level for now. Meanwhile, a break below 1240, that's very important support, also near the 200-day moving average. This would bring prices to a more neutral bias, but it would weaken the bullish view that's in place right now. Thank you so much for watching and have a great day.